Good day. This is the Elliott Wave weekly update for the NASDAQ 100 and the S&P 500 being recorded on Saturday, January the 4th, 2024. I'm going to be combining both the NASDAQ and the SPX for this weekly update due to time constraints and the fact that I need to get it posted, and I'm still traveling and will actually be flying back to San Francisco tomorrow. So here we go. We're on the NDX. That's where I'm going to start. I'm on the cash market. The market, as the way I've labeled it, does appear that it may have completed what I'm labeling as the minor A wave of an ongoing intermediate fourth wave. Now, remember, in this intermediate fourth wave, we're going to have an ABC, and that ABC will be of minor degree. So we were looking at how we're going to really count this first ABC down. And as it turns out, we can see here on the 4-hour chart that it is exactly an ABC rather than a 1, 2, 3, 4, 5. Now, being that it's that, and that's just the way the market is traded. If I can, let me just open this up so we can just take a cleaner look at all of the internals here. Whether this is 5 and this is 3 and this is 5, it still is an ABC rather than a 1, 2, 3, 4, which it can't be, because this section did come down, put in a new low, but it rose up, breaking back above, which would have been wave 1. So it would have been 1, 2, 3, and this could have been a 4. So that gets disqualified. The rally puts this ABC in place, and I'm putting a minor A there. I discussed this last week as a possibility. And now with Friday's trade, it actually then just puts it into place as a 535, but it's an ABC. And therefore, we're now opening up to a B wave, which again, what can we expect from this B wave? Well, because it's a 3-wave A, we're looking for not only a 3-wave B, but we now are running the potential that the B wave could end up being, or the entire structure could end up being, a flat. Now, that I find very interesting, but I think we have a lot of outside influences going on right now, and just the market's trying to find its footing. What do we want to do? How do we want to treat things? We still have too many things outside of the reality of the market, so to speak, that we're going to have to deal with economically should any of them start to explode. Now, again, we have a new administration here in the United States that will be taking over, and both the Senate, the House of Representatives, and the White House. So it'll be one side, it'll be the Republicans that are in charge. And, we're going to see what they do and how they want to do it, and where things go in terms of what has already been spoke about that the new administration intends to do. And so if some of those things get in place, we're going to see a lot of battling going on in the market, in my opinion. If we're already getting answers from the possible tariffs from Mexico, from Canada, from China. So they're already kind of bucking up and going like, okay, if you're going to do that, this is going to be the answer. And so I think that we're going to start which could be a very strong negative for the markets. Now, again, yet to be seen. So this is all just conjecture at this point, because we have to see actually what's going to come out and what responses are going to be and how things take shape. There are still other things going on in our world. We still have the Ukraine conflict. We still have Israel and Iran, believe it or not, very undertoned right now, but Israel is still very aggressively taking out what they believe are enemy positions in Lebanon, in Gaza. And we've not yet heard, although promised, of a more substantial answer, or just that Iran will come back with their answer, or what they're going to intend to do. Now, I know that we've already seen where they fired all those missiles into Israel without much success. But I think that the retribution or their response will be yet to come. And as far as I can remember, that it was spoken by someone within the Iranian government, I believe, that talked about that the response would be done before the new administration in the United States takes office. So we have that yet. Now, maybe it'll be something, maybe it won't. I can't say. I'm just laying down what we have and what the market may have in the back of its mind. But more prevalent, I believe, in the minds of traders right now are what are going to be the implications should we or the United States begin to announce tariffs against China, against Mexico, against Canada, where we import a great deal, particularly China, where we import a great deal of products. And again, also within Europe. So yet to be determined. So right now, I still believe that we likely have finished this minor wave A within an ongoing intermediate fourth wave. We continue to have our Fibonacci support levels down below 0.236. The absolute bare bones minimum for the NASDAQ, again, cash market, would be 19,428. 382, 17,754. 0.50, which is, 382 to 50% is the most common, 16,402. Now, getting back to where this market bottomed in terms of minor wave 4, which is actually what we look for here, that would have been, that was 17,435. So the 382 is 17,754. Well, 17,435 is just 300 points below that. Actually, not even. Yeah, 300 points below that. So I would suspect that it's going to come very close to, if not reaching that level, before intermediate wave 4 is complete. So we are in the initial stages. In my opinion, we may have finished minor wave A of intermediate wave 4. Now, if that's the case, let's quickly just kind of put together some fibs that we're laying out for the possibility, if we're going to move higher in an minor B wave. So what we got going on here, let me just go over here, reset that. It's just going to be basically what we're looking at is just your basic ABC up and different, don't want that. So let me go over here and nope, I don't want that either. Let me go here and here. Now, come on. Just I get there. Let's go there. There you go. I want to edit this. And we now want to start taking that out. We're going to keep that. We're going to change our colors. This is going to be it's going to be a minute ABC, but it's going to be a minor degree B wave. So let's kind of put those colors up front. And so we're going to have it all coming out. And I'm going to leave that one off. Oh, come on. And put it there. And I'm going to be putting in a couple additional 1.236 and 1.382. 1.382, which are going to be the irregulars, which would be also coming into play here. And so I'm going to take that out. And I'm going to take out, that's gone, that's gone. All right, let's see what we got. So in essence, what we're looking for, we've already, just out of Friday's rally, we've gotten up to 382, which was at 21,294. So most common for a B wave, and again, it's going to be an ABC. So we cannot discount the fact that, like, well, so let's say we get up to 50%, 21,452, that'll be wave A, and then we come down into B wave. So if we bring this down to a 1 hour chart, kind of got 1, 2, 3, 4, 5. So that could be wave A. And then we come down in a B wave. And then we go back up in a C wave. So that'll kind of brings us into focus here. Hold on. Do this one. I don't need 786. So that's the one I wanted to get rid of. So most common for a B wave is going to come in 50 to 62%. That's between 21,452 to 21,612, I'll call it. And then it goes to where it could be a flat, and flat would be that it gets close, but maybe doesn't necessarily exceed 22,125, which is the existing high. And or they're just thereabouts. Let me see if I'm not exact. 22,133 actually is the high, the existing high. And then from there, if we kind of go over and we have what we could be in a regular B wave, if they really get excited here, then we have the possibility up to 22,044, 22,443, 22,639, and that could be 1.236 and 1.382, and it could be an irregular, and we still come tumbling down. If we really listen to what everybody's talking about, wherever it's going, it's like we saw what they did in Apple, what they did in NVIDIA, they did in Tesla, and a lot of the Mag 7. And if we saw again Friday, could have been expiration again. And then, so let's not forget that we had the year-end expiration on Tuesday. So now we're into the new year. And so are we now going to reinstitute a lot of positions? And then we also need to factor in what really took place on Friday. And then with our capital flows and our option flows and the gamma flows, what actually happened within our markets. A lot of it gets related, of course, to the S&P, because the S&P, the SPX is Big Daddy in terms of carrying the strength of the markets and getting those calls. Not that everybody else needs to follow what the S&P does, but that particular index and how things flow in and around. And when volatility triggers get triggered and things happen, it becomes more important there because that whole energy carries over to the NASDAQ, carries over to the Dow, carries over to the Russell. And that's what becomes more important. So when we're looking at the SPX, which I'll get into, but here in the NDX, I still think that what's going to be important is that we need to get ourselves above 21,500, cleanly above. And I think that can be done. And in fact, it may happen before we actually drop down in a minute B wave, and that would be minute wave B of minor wave B. So leaving all that right there, what am I going to be looking for here? Well, I think that we probably will see some follow through to the upside. And part of that reason is that what really took place on Friday during the expiration is that there was a lot of overhead gamma that sat above the markets, and it kind of started to put itself together and wrap itself around. In the SPX, it was around 59.50. And in the NASDAQ, I believe that equal is 21,400 to 21,000, right where this guy is, right where this hourly 200 is at 21,438. Now, our high on Friday in the NDX was 21,310. So it was a pretty decent rally on the day. In fact, the futures market finished much above 300, up over 300. And no, it always comes out that I need to pull it so that I can see what's underneath all this. It's not what I wanted. Yep, working. Okay, that's not what I wanted either. All right, so let's try this again. No, not one more time. No, not going to do it. How about this? Come on. Close it. Let's go back here and try that one more time. I'm just trying to find where the NDX ended up closing. NDX, I was up 350 on Friday as a total. Now, that's pretty strong. That all looks pretty good. So what we may see is some additional follow through, because as well as the market really dealt with this. There was a volatility trigger right there, 59.50, and I believe there was volatility triggers in the NDX and in the Q and in the Qs and in the NQ. About it was 21,456, I believe, in the NDX. So that one has not been reached yet. And when it does, it just kind of takes and flips a lot of negative overhang in gamma and disperses it. Now, I believe that due to the expiration that also was on Friday, a lot of that did kind of get a lot of that positive gamma out. It kind of flattened it out. And at the same time, it kind of leaves us in a position where we may not really, it might just be a very neutral type of an opening on Monday and tomorrow until we get some footing as to what exactly the market wants to go after, what we're going to do, where things are going to shift, and what's going to be happening. We are also moving into earnings, believe it or not, which will begin the following week. One other thing to note for next week, so that I don't forget, the market will be closed. The U.S. equity markets will be closed on Thursday, the 9th of January, to honor that the late Jimmy Carter. So he was president of the United States, passed away last week, and he will be the funeral will be on January the 9th, and it's a state funeral. So the markets will be closed out of just to honor and respect that day or the funeral. Now, so we're kind of getting chopped up a little bit on our trading days because we had New Year's Day was a Wednesday, Christmas was a Wednesday. So we get a break in our weeks, and now we're getting another one. And then coming up, we also will have Martin Luther King Day, which I believe will be, let me just take a very quick look to see where that's going to be. I believe that, yeah, here we go. It's going to be on Monday. Martin Luther King Day is Monday, January 20th. And that's also Inauguration Day. Wow. Okay, so the markets have been closed on the 9th, and then we have the week, next week, full week trading, and then we have another holiday on the 20th. Very interesting. The markets will be closed. All right, so back to those markets. So what we really kind of had going in is that a lot of the excess implied volatility that were in the markets got flattened, primarily because of the positive gamma being flattened. And we saw that pretty much real quick in the opening, by the way, if people really were paying attention to what happened to the market. We saw nosedives, we saw run-ups, we saw nosedive and run-up, and that was just, that's exactly what they're doing, monetizing and flattening a lot of gamma. And so it's now out of the market from Friday's expiration. So what could that tell us is that a lot of that was done above fair value. So it kind of just flattens everything. So we're going to, I think, have a muted trade day on Monday. We'll see. We will see. Again, a lot of things, because maybe it'll just start all over again. But again, with that volatility trigger, and that's what I'm going to be looking for, to see where it's going to be reset. And I'll have that actually on Monday morning. So I'll be including it in our first update for the futures markets on Monday, which will be under the YouTube memberships. So again, once we can get a gauge onto where the volatility triggers are. So right now can we assume that the volatility trigger in the SPX is still going to be at 59.50. It went above it, closed right around it, kind of played around all in that area. So it neutralizes that volatility trigger. Now, if continuing to go higher would again start to revert things back over to a risk on type trading, risk on positioning. And that's kind of the part that I feel could add a lot of oomph to a rally. And so they're going to be reestablishing these positions all over again. And then again, as we start moving in next week to earnings, well, we'll see how, and it always starts with the banks now. We'll see how things are going to start to play out. So could be flat to sideways to just adjusting here and there. But in terms of strong movement, I think a lot of that's going to have to wait until the new incoming administration is in place, and that comes on January the 20th, or until resolution or escalation of any of the geopolitical situations kind of comes into play. So I am looking again. We've got the A wave. Maybe it's done. Maybe we need a little bit more. Maybe we get up to that 21,450 to 21,500, which again, I believe is going to be where the volatility trigger is going to come in for the NDX. A break above that definitely shifts the atmosphere over to positive gamma and positive thinking, and that it is selling the VIX and buying the intraday vol or the volatility within the component members of these indexes and ETFs. Now, when that starts to occur, our implied volatility within the options of those underlying component stocks begins to move. And that's where we'll see the volatility begin to expand again, where the VIX will continue to contract. All right, so what we have, 21,452, 21,611. Now, continuing higher, we most certainly can. We most certainly can. And we have our next level. In fact, I would probably be looking, we can get up to 21,840, which brings us to the high of the previous of minute wave B. We could go rogue and go flat at 22,125 or above 22,000. That would also be a very strong signal that we either going to go super rogue and head up here into an irregular, or I will have, I sort of has a thought process going on what the an alternate count would be. But I'm kind of leaving that for right now. I just want to see how this all plays out and how gamma either gets rebuilt or how things get distributed next week. And again, while we wait for the new administration to be put into place. All right, so irregular, that's all going to be up here, 22,125 to 22,443. That would be the irregular fibs. Otherwise, we've got 21,452 up next. And right there's with it is the hourly 200, should be providing some resistance. And then above that, we have 21,600. We have 21,500. But again, I want some confirmation from the models on where the new or the adjusted volatility triggers and call walls are going to be. Going over to the to the NQ. Kind of sometimes it can get wild and woolly. Not as clean, but sort of is as clean as the NDX. But I just went down a level. So here we are. We have a 5, 3, 5, and ABC down. I'm putting in a minor A there simply because, again, where did we go? We went way too high. We did go down. And if that was 1, that was 2, this was part of a C wave down or even a third wave down, then I needed it to go much quicker and much further. And I didn't, and the bounce couldn't have been that high. So that's why the count's going to be left as it is. Right now, an A, a B, and a C, minor wave A in, we're into a minor B. And so we do the same thing. And we're going to go there, and we're going to bring this down to there. And I know I didn't want to do it beforehand. So I will put that up now. And we're going to edit. And I'm going to take off 0. And all of these are going to come into minor. So I'm going to put them up as such because we're looking for a minor B wave. So this will be the whole shebang. And we'll break it down further in terms of where the A wave might be. et cetera, et cetera. And I'm going to change these to 1.236 and 1.382. And we're going to put that and that and stick it on up there. So now we have our levels. You can see that the market already on Friday got up to the 0.382 level. Now that's not bad. And that's very common for a bounce. So I got to leave open here in the futures market because it's not that easy to count. You can see I got a running 4. I've got all kinds of things going on in here. This count became very difficult when the market started to get real antsy right in here. That was all clean, but this is antsy. So this, if it stays clean, could be 1, 2, 3, 4, and we're going to just run up again on starting tomorrow in Globex and then into Monday. And then that would leave that A wave clean, and then we're off to the races, and we're going to get our act together, so to speak, and take it on the road. Now, the futures market is above 21,500. So in here, that break has got to be at the 50% level, 21,700. And so our fibs right now for the B wave, for the minor B wave, 21,700 to 21,886 or 21,900. 22,000 is not out of the picture for this market to break back above. If they do, trust me, I think we'll get the notice beforehand, but the shift will, in my opinion, have occurred in terms of the flows, in terms of risk on versus risk off. We've just went through a large period of, not large, but several days of risk off type trading. And so now it's time they're going to swing it back, but they got to get it up above particular levels, and that's where it kicks in. So we got to be looking at that. And again, we just need to kind of keep an eye on what these happening and what we can be really looking at. So let me take a peek at the NDX. As of Friday afternoon, the volatility trigger in the index was 21,120. That was in the index. So let's take a look. That's just coming out. And so that could be what stands going into Monday. So 21,220, 21,120. We're above it. So essentially we broke the volatility trigger in the NDX as it stood on Friday afternoon. So our next level basically would start to head up towards the call wall in the SPX, which is at 21,275. By the way, I'm giving these now. I'm putting them into this update as a lead in towards the start of the YouTube memberships. This information I'll be giving daily and then updating sometimes in the Discord on the Discord server, so on Discord. And so I want to let you know this is the type of information, and what you're going to be getting here is levels that, should the market start to go above, we're definitely moving into a risk-on type of an atmosphere. And that right now is 21,275. So, and we are above it. So again, unless that changes between now and Monday, so when we get Monday morning's figures, and I'll be after the some of the trading for tomorrow, I'm looking for it to kind of continue to rise. And that's the NDX, and now we can go over and look at the NQ and see what those levels are in the NQ. And basically the comparable one for the volatility trigger is 21,277. That one's not as dependable, but 21,277. Oops, get away, 21,277. And so we are, come on, above it. So the volatility got triggered, and that actually you can see right there. See what happened? I was on the opening. When once that broke, it set in motion the balance. We had one large retracement back down immediately, and then they came back up and did it again. And that's when it was just get out of the way. So they went up and they broke it, put some follow through. The sellers came in, took back that control, brought it back down, brought it below, which basically produced a failure. So that gave them the impetus to continue to push further. But in that process, what they were doing is monetizing what they needed. So in other words, it's like we're having this release of all the gamma. How are you going to do that? By monetizing and get it taken off. That's how that takes place. So that we saw a lot of that opening, and then that exactly the opening run up and the opening run back down, did a lot of that and set up the stage then for the volatility trigger to be retaken and to continue then thrusting the market back into, or I guess it actually was being thrusted back in to a risk on type of a trade. Again, disbursement of all of that gamma, gone, taken away, because it's been resolved, it's gone. Then that also can normally gives us a pop in volatility. So I wouldn't be surprised to see that kind of uptick a little bit come Monday morning. But we'll see. We'll see how that all takes place. So here in the NQ, we got the same pattern, the same market that I've been talking about, where I think that we got the 382 and we got above it, came back down, closed below it. The 382 position is at 21,539. Here again, what have I got labeled? I've got the minor wave A labeled down here. Now I've got the fibs for minor wave B. Minor wave B, most often 50 to 62%. That's 21,712 to 21,886. And then above that, we have 22,000. That remains still very, very important level. Now our all-time highs are 22,448. And so there we are. We're going to start getting above that. I'm not necessarily thinking that we're going to be in the intermediate wave 5. So I don't think this move completed intermediate wave 4. Number one, because it was really not much more than a week. And so that would just astound me, let's say. And so I'd be looking for a lot more time before this would be considered complete. So obviously we're now into 2025. Are we looking at January, February, March? Very, very possible. Or even extend it further out. And that's just to kind of finish this. So we got a B wave rally, a C wave decline, and then we get that intermediate wave 5. So minor wave B of intermediate wave 4 has potential to get us all the way back into an irregular, or at least a flat. A flat brings us back towards that 22,450 area. And then we have the irregular, which is 22,795 and 23,000. So yet again, those numbers, which have been around forever and a day, remain in play. So that's the NASDAQ. Let me take this out, at least on the futures basis. Let's take it out and take a look at the moving averages. Look at this is the daily. So the daily, the 50's flat, the 200 still heading very slightly higher. So it never really, but it was going flat. 50's flat, the 20's flat, even the 10 flattened out. So again, nice day, very positive day, sets the stage for continuation. But what actually on the daily, have we got a reversal of fortune and this thing just really came down and broke 21,000? Wow. Gets below 20,965, I believe was that low. 983, excuse me. So we start to break 21,000, we break 983, and we start heading below. Then it's going to be very bizarre, because either we're going to get a very strong, but to flip it, I do have some alternates that could extend this wave. But again, it makes it very difficult if I have to say this is 1, this is 2. So we're still in that minor A wave, and it is going to be a 5-wave sequence down. So how can I count that? Well, you could. 1, 2. Minute 1 of still, no, we'd be in, let me just put this out. 1, this would be a 2. Minute 2, we'd be in minute wave 3. These would be minuet, and it could be wave 1, minuet wave 1 of minute wave My minuet wave one. Yeah, could be minuet wave one of the C wave of minor A. So still, it could be a lot more. But what does this say? This says it could have to be an ABC and it could just come flying back down. I don't necessarily see that right now, but stranger things have happened. So that's just kind of tossing in that irregular in there as well. Not the irregular, the alternate. So forgive me. Okay. Moving averages even on the hourly, not looking all that bad. But we'll see. We'll see what happens. I'm going to jump over to the SPX. I'm trying not to make this super long. But so we're just basically going to stick to Elliott. All of the other analysis that I'm presenting on with the geopolitical and just the commentary, that all, of course, remains the same here. The SPX, when I was dealing with what our capital options and gamma flows were all relating to the SPX. And again, in the SPX, we have to consider that we had that 5950 level, and that was the volatility trigger. And the volatility trigger gets moved still. Right now, coming out of all of this on Friday, the volatility trigger has not moved. So the volatility trigger remains at 5950. So if we come in on Monday morning and they're gapping above 5950, a gap above 5950 would truly, I think, reestablish this volatility trigger as valid. And then the market would likely start to go into a risk on type of trading. So in the SPX, we have the volatility trigger at 5950. The call wall, believe it or not, the call wall has moved all the way up to 6,200. Now, I believe 6,100 is going to provide a little bit of a push, and 6,000, I believe, should provide a little bit of some resistance and a push. But I think what we had there before in terms of a volatility trigger or in terms of a collar position that JP Morgan had, well, that's gone now. That's expired and it's been moved out. If I have not been able to find where, of course, I wasn't really looking. I did actually look on Thursday. I didn't see it. I did see that there's a large put spread in March 31 expiration. And I figured that's how they start it. They put on that put spread and then they come and they do the collar, the other side, which is the calls. So now let's talk SPX. What we have here, the same deal. This one has still got that little bit of that irregular, or not irregular, that failure where 5 did not make a new high. And I'm kind of leaving it there because it does count. So we're going to, oops. All right. So let me try that again. Since it didn't do it right, now it's still not doing it right. Let's go to the 15 and back out to the hourly. Thank you. And I got my drawings, and that's what I'm doing. There you go. We're going to bring it down to here. Now, the SPX actually did make a new low on Thursday over what we saw the previous Friday. So I'm going to put that in. And now we're looking again, because I'm labeling it the same in terms that it is a B wave now. So minor wave A is in place down below. And we're going to now quickly get in there and edit these. I can take that out in 236, put that in. These are all the minors. And again, what we're looking for is a minor wave B. It's going to come out at an ABC. So the first, it's going to be minute wave A of minor wave B. That's what we're looking at right now. And 786, I don't really like. One I like, so let me take rid of that one. Put this one in. And then here, just in case. And this one, 8, 3, 8, two, and highlight both of those. And we're going to take these guys off, come back over here. Now, you can see in the SPX, we got above 382, came back down to it, closed just above it. So that's an actually very strong move. So that's why I'm kind of coming up and labeling this ABCA, setting up the same stage. We could have a flat, an ABC flat, which is going to put an intermediate wave 4 in a very strange position. Now, also could bid ABC minor A. And for this whole intermediate wave 4, it's going to be a triangle. All the way out, it'll be a triangle, and we just bounce around in between here. That could be interesting, right? Right. Fourth waves, it could take a lot of different structures. So we're going to wait. We're going to see. We got a lot going on. All right. So for right now, it looks pretty strong. Our next stop's 59.60. Again, we pop above that volatility trigger. I would expect it to gap, and 59.60 should be easy. 59.90 should not be too difficult. So the S&P would then be expected to retake 6,000. That starts to loosen up a lot of what could have been or still overhanging gamma at that level can be just taken right out. And the risk on trade takes firm hold. And then we would be looking at a call wall sitting way up at 62. In fact, I could go back and look and see if that's just where that trigger may be. So if you got the options, you go over and you take a look and you go trade, and I go all products, and you go over to the SPX, and we're looking out to March of the last day, March 31st. And we can just kind of come down. See the 41,000? It's in the 4,700 put. So let's go over here to these calls. So maybe that collar did get put on. Didn't show up, but now it may be there. Okay. If it's at 62,000, then we're going to get an in. We're going to get an idea. I'm looking in the wrong column, right? No, it can't be that low. So this is where I was having a problem. I saw the puts. I'm like, where are these calls? Yeah, that's up way too high. So I don't see the other side of the trade. So again, we're coming up with that. Maybe that's all they really needed to do. It's all they were looking to do. So maybe their hedge strategy has changed a little bit. And that's very possible. Now it's gone. I saw it. We all saw it. Yeah. Okay. It's going to drive me crazy. I saw it. We all saw it. All right. So we're looking for that. And if it's going to be there, let's go back out to the chart. So in the SPX, yes, I still am looking for, we got a B wave, but remember, it's going to be an A, a B, and a C. And if it's going to be a flat, we're really cruising pretty quickly. So maybe we've already done the A wave, maybe a little bit higher, and we come down into B, and then we're going to measure that B wave. Once we get the A, we're going to do the same thing. We're just going to do figuring out your retracements for how deep then. So we go from there to wherever that tops out. How deep then to come back down. I would suspect that right away, I'm looking for it to hold above 5,900, depending on how high it gets. 59 down to 58.91, but definitely I'm looking for it to stay above 5,800. 58.50 to be honest with you. All right, so back now over in the ES. If we're taking a look at what the levels are going to be, the volatility trigger in the ES is pretty much right where it got to. 59.97. That's the volatility trigger. So in the futures market, it nope, not going to do it. Didn't take it out. So we still have that in play. If it gets above it, then we might see a very strong Monday. And what it is risk on. And what they're going to be doing is selling the VIX and buying the component vol. And that could just really push this market up. And then again, above all this, we have the call wall at 62.47. We have a large gamma position at about 60.47. So that just is a little bit of hangover, I believe, from that 60.55 area. So I think with 60.47 to 60.55, there's still some leftover gamma sitting there. And that could cause a couple of things. It could cause enough where it puts in a little bit of its own wall and we drop back down. But then again, if it's an A, a B, and a C, that's what I'm looking for. So we have to think about what could create that situation. That'd be one of them. Other than that, I think we're in pretty good shape to be a little bit range bound. So not so much be building rallies, or just really getting creamed to the downside, unless something geopolitically happens or something politically really upsets the market. And those surprises will usually invert one thing or the other. So it's going to revert it to the upside or revert it to the downside, depending on how it is perceived. All right. So in the futures market, we've kind of got the same thing going on. 1, 2, 3, 4, 5, still also a little bit strange. Running 4, but it did end up making a new high. So it's just an irregular. And so this is what I'm talking about with it just got real strange. A little cleaner here than over in the NASDAQ, but still very small 1 and 2, large 3, 4, and a 5. And I know what Elliott talks about. I know about the look and feel. I've wrestled with this now for several years, with the onslaught of algorithms, with the onslaught of new models to measure market moves, new models to measure gamma and where gamma does and how that comes into play because of how capital is being shifted around by larger traders and how it's all coming through the options flows. So putting that all together, what really takes over, what really becomes the underlying? Is it the the equity market? Is it is it the stocks, or is it the indexes? And the indexes become the underlying, or the options. That everything turns on its head. So instead of the options being, the options are the index, the options are the power. And what's happening there gets reflected back out into these indexes, and that then gets contributed to the moves based on how and what's happening within the options. Interesting concept, but it is kind of playing itself out. So in the ES, if we're counting this as an A, B, C, it is a C wave failure. And boy, look at the A wave to the C wave. But you know what? It is not all that impossible. If we're just looking, and I'm now just going to say I'm looking to take a look at see what that C wave could look like. Let's put it back up there. Do you see 618? It got just below it. 618 for C wave is not the most common. It's not even second, it's third. But there it sits, and down to almost 100%, right? Here it is. So it did in a small failure, C wave to a small failure to the A wave. And I am, folks, running with it. So comments, I'm open, but please just, let's keep it into an Elliott conversation as to why. All right, so back to the chart. If it is going to be an ABC and it does put in a minor A, small failure and all, then what's that B wave going to look like? Go back and change this, put this over to here, and we're going to go here and go there, down to here. Yep. We're going to make that switch real quick. Edit all this out. Again, we're looking for the minor. We're just going to put that color in. Now, it's always in the orangey color. I think they call it saddle brown. 618-786 I don't use. 8.882 I think you can use. We're going to go there and go 0.882, and we're going to look for it in the SPX because that's always a good market to do it. And then we got the 1. And here I am putting 1.236 and 1.382. I'm going to call those also in our minor degree. Those are the irregular, if B wave turns into an irregular. So we're getting rid of all the outsides and we're putting in the insides. So right now we're up to 50%. The futures market, the ES, got up to the 50% market. Very strong, beautiful rally. Maybe it's an A, B, C, maybe it's 1, 2, 3, 4, 5, A of B. So do we get a zigzag up? Should be a 535. But is it a 535? A zigzag? Could be. Could be. But still, look for an ABC. And that could be the A. Maybe we get up to that 6,000, kind of fails up there, and then we come down at a B wave and we go back up in a C and it's all done. How long? We'll wait and see. But I still, on the outside, folks, I still think that there's going to be some downside on this. So there's our numbers. Again, forward thinking, they're going to start focusing on the earnings of the banks. So I would see the Dow, I would see the S&P begin to be more active in those particular, like Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, Wells Fargo, Capital One, etc. A lot of the big players, a lot of the big banks will come in. And then it gives us a little bit of a test on the health of what's going on. And we'll look into what's happening there. All right, I am going to finish this. Again, I'm going to try to keep it on a decent level. I'm looking like it may be already an hour. I'm not sure. Now, again, starting on Monday, it is time. And this will be YouTube memberships. And again, the price for the silver is $24.99. Price for the gold is $49.99. And within that silver, you're getting the weekly, you're getting the daily in the S&P 500 and the NASDAQ 100, and you're also getting the levels, the volatility triggers, the gamma, the call walls, the put walls, everything in between where the large gamma positions are sitting, that is included in the ES, the spiders, and the SPX on the weekly. During the week, it'll be on the ES and the spiders, and the NQ and the Qs. So you have those levels, and they're very, very important. And the ETF sometimes controls the futures market there. So that'll be starting on Monday. Now, the easiest way that you're going to be able to get in on this is that, again, the silver versus, and if you move over to the gold is that everything that I'm talking about, but plus in that silver, you get access to the Discord room. So the Discord server, and there people could be talking and texting one to one another and discussing things about what's going on in the markets. And we're trying to put together a little bit of a forum there. And that is where Sasha and I will be posting alerts and quick updates. If we see it and need it and the market needs it, we'll be putting that in Discord. All right. So I am going to finish this for right now. I will be back in San Francisco on Sunday evening. I'll be back at my home office and my home desk and on my big computers on Monday. And so the next daily update will be on Monday, January the 6th.